welcome to the second Forex trading presentation. This is AJ here. So in the first presentation, we briefly talked about some basic terms and what is Forex in general, what's trading in general, what's that all about, etc., etc. And like I promised in the following presentations and live sessions and videos, I'm going to talk about like Forex trading in depth. So what do you want to do? When do you want to do it? Etc. etc. So today, as the title goes, we're going to talk about when do I buy when doing Forex trading. So when I'm in the market, when I'm doing Forex trading, when do I buy, right? And this presentation is going to be again about some basics on when would you like to buy, and then on the live sessions of me actually trading and actually taking a look at these things in depth. I'm going to show you the strategies and the techniques you can use to do the exact same, right? So first of all, how do we decide what to do in Forex market? So like we said, we can either buy or sell currency pairs. Remember, so currency pairs, let's say like Euro USD, AUD JPY, USD JPY, and on and on and on, right? So today we're going to focus on the buying aspect of the thing, right? I'm going to mention a couple of things we have already talked about earlier, and basically you can use these same techniques to do a sell order as well, but today, for the sake of the video, we're going to focus solely on buying, right? So when do we buy, how, and what's that all about? We're going to talk about that today. All right, so where do we decide what we are going to do? All right, so in Forex trading, we basically have some things that we need to have by our side when we want to make decisions, right? So we need a platform slash tool, and we need a broker. A broker is a guy that places our orders on the market, and the platform and the tool is just where we place the orders and how do we analyze the market, right? So as I said, platforms and tools are places where we trade. And the tools I use to make analysis is called TradingView. You can see it online. I'm going to show you the chart online live. And platform where I put my orders is MT4. We're going to touch on that a bit later. Okay. So like I said, TradingView tool. This is a screenshot I took of the AUD NZD this morning. We have the price action here, so we see these little things are called candlesticks, and that's basically the price itself. And once I do the full tutorial about the trading view itself, I'm gonna lead you into seeing what's this all about and what does all these things and little places and icons mean, right? So like I said, this is a chart, right? So this is how we analyze the market. I actually have the alligator indicator on. That's some things I use for my technical analysis and all that other stuff. So this is called a chart. You see here the price, you see the time, etc., etc. Once, like I said, once I do an additional review of the TradingView tool, we're gonna go into that in depth. But this is the online tool I use to make all of my analysis and my trades. Therefore, now the platform where I trade. This is a screenshot from my phone. This is a MT platform. Now MT4 stands for MetaTrader 4, and like I said, it's a platform where we place and trace our pending, active, and closed orders, right? So as you can see here on the left, you have the pair names, so AUD CAD, AUD CHF, AUD JPY, etc., etc. And over there on the right side, you have two columns, right? So the left column is the selling price. The right column is the buying price. So basically, you see here that they're not the same. There's a bit of a difference between the two prices, and that difference is called the spread. So the spread, so the difference between the price at which you can sell and the price at which you can buy is determined by the broker himself. So that's just a broker thing. That's how they make a bit of money on the side as well, etc., etc. So they decide how big of the spread there is. But all you need to know is this is a MT4 app. It's downloadable on Google Play Store and Apple Store, and you can download it and see how it works on your phone. Now, let's make use of some of the terms used in the first presentation. So we talked about quite a few terms on there, and these are some of it. Now, I'm going to go in depth with every single term on this list here, because you're going to use one or maybe a couple of them in order to place a buying order, to analyze the market and see when should you buy and why should you buy. So first of all, we have trends. Now, what is a trend? Basically, the trend is a a like where the price moves. So the trend is basically the road, if you will, where the price moves, the path of the price, right? So we have something called the uptrend and the downtrend. You see here, there's a picture of an uptrend and a picture of a downtrend. So what does that mean? Basically, if we're looking at the uptrend, the price is going up logically, and if we're going into a downtrend, the price is going down. So it's basically the path where the price moves. That's called the trend. Now, the other thing, support and resistance. Now, support and resistance, like it says here, are like the levels on which the price usually comes back to. So as you can see here, the price moves up and down, up and down, up and down, and there you see this little line where actually the price touches this line quite a few times, and that's in this case called a support. So as it says here, market loves to do the same things, and you see here that within a period of time, the market price has actually touched the same line. So the price came back to the same very line a couple of times in a period of time, right? So in this case, we're looking at a support because support acts like a floor, right? It acts like a floor, and the floor is obviously down. Now, if we were to draw a resistance line, it would be up because resistance acts like a ceiling. So in this case, the resistance would be, let's say, at a price level where the price has reached it a couple of times. Actually, I can see it here, but I'm going to make a separate video on marking up the charts and how to use support and resistance, because support and resistance trading is actually one of the techniques which traders use, like just support and resistance levels to see and probably make sure that the price is going to go up or down. Number 3, candlestick patterns. Now, candlestick patterns are really important, and you have to know basically two things about candles. So there are bullish and bearish candlesticks. Bullish is the candles which go up, which means that they open at a certain price and close at the bigger price. And you have bearish candles which do the opposite. So they close at, let's say, they open at, let's say, $50 and close at, let's say, $47, etc., etc. So in this case, the bullish candles, which open lower and close higher, are the white ones, and the bearish candles are the red ones. So there are 7 kinds, about 7 kinds, 7 major kinds for both. I go over that with my students, and I'm going to go over that once we do a live trading session. So you have around 7 types of bullish and bearish candles that you can see inside of a chart. Now, another thing which is very important are the moving averages. So moving averages, just like support and resistance, is another thing that traders use as a technique to see where the price should go, and it just should go next. So moving averages, like the definition of a moving average, are just average price actions in a period of time. So it's just the average price within a period of time. So the popular MAs or moving averages are 50, 100, 150, and 200. What does that mean? This means that the average price in the last 50 days, which is the moving average 50, the 100 moving average, 150 moving average, and the 200 simple moving average, it's basically the average price within the last 50, 100, 150, 200, 300 days or whatever. And there's a strategy, like I said, that I personally do, and a lot of other traders do as well. I do them personally with my students one-on-one on how to make money using these exact strategies. Now, divergence. This is a really cool thing because divergence is a difference between price on the chart and on the, let's say, MACD indicator. So we're going to go over this once we go over the indicators, the MACD indicator. It's an indicator a lot of traders use. And as you can see here on the chart, the price makes lower lows. We're going to go over that as well. But then on the other side, the MACD indicator, which is the price down there at the bottom of the screen, makes higher lows. So it's basically a difference between the price on what we see on the chart and what do we see in the indicators. Fibonacci levels. Now, this is very good as well. Fibonacci levels are basically levels of Fibonacci retracement, and that's as well as the moving average and the other techniques which traders use to see when will the price probably go up again, right? So like you know and like you saw, price moves in waves, right? So price never moves in a direct line up or down. Now, price always moves in waves, right? And so let's say that here we are in an uptrend, right? The price moves up and it moves up in waves. So the price goes up but then comes back down. And so if we're in an uptrend, the wave up, the price wave up is called an impulse wave, and the wave back down is called a pullback, right? And so we take a look at these so-called Fibonacci levels of retracement, which means basically how deep, how big is the pullback? How big is that pullback after the impulse wave? So how much does the price comes back? How does how much does the price come back before it shoots back up, right? And that again on its own is a technique people use to trace some buying orders and to see when's the good time to buy. Now, indicators as the last thing. Indicators are just additional tools used to make your technical analysis easier. That's the whole definition and whole idea behind them. As you can see here, some of the indicators a lot of people use are, for example, zigzag, MACD, alligator, MAs, EMAs, SMAs. That means the moving average, the exponential moving average, and the simple moving averages, Ichimoku clouds, cups, etc., etc. So it's basically some additional tools and little guiders if you want to basically make some simple analysis and to make your life easier. And like I said, once I do a video, a live trading session, or a video on the TradingView app itself, I'm gonna go in depth over these, and I'm gonna tell you basically what indicators do I use and what indicators do I suggest my students to use as well. Just one more thing to recap on of everything on the TradingView tool, everything we talked about. So over here you see the price moves in waves. It doesn't move in a straight line up or down. We see some clear trends here. And actually my Williams alligator indicator is on. So you see here the extra blue, red, and green line. That's the alligator. I'm going to go over how to use that as well. And so we see here the pair. The pair name is AUD NZD. It's the Australian dollar versus New Zealand dollar. You see here that I have my EMA 50, 100, and 150 exponential moving averages on. They're just not visible. That's a technique I use as well, just to see and make my life easier. So we're gonna go over once again everything that you need to know about the app itself. I really recommend this app because it's really easy to use, and it can you can basically log in and it remembers everything you did. So every analysis you made, it remembers it, etc., etc. So it really makes your life easier. That's all for today, folks. Thank you for being here. Thank you for listening to me. We're gonna do a lot of more videos. A lot more education is coming up. I want to make sure that every person has a chance to learn new things and to be financially free, to learn skills that will bring you financial freedom. So you do not have to stress about money anymore. And Forex trading is one of those skills. And I'm not saying that you should or that you have to trade. No, of course not. I'm just saying that you should at least give it some thought. There are a lot of brokers who issue demo accounts. You can practice and practice and practice, and you can. I know people who have practiced and been on demo accounts and practice with like dummy money. They have been practicing for like a year, and then they moved on to real trading and they made some really good money with trading. So trading is a good way to make money if you know what you're doing and if you learn it. So I am here to make sure you learn it, and I'm here to make sure you can be financially free one day if you want to do it via trading. So I really suggest that you can at least give it some thought, at least give it some practice and see if it's for you. You can go ahead and do it. I encourage you to do it if it's for you and if you find it easy and if you find it understandable. If it's not, well, you can do some other stuff, right? But we're here specifically for trading. So once again, thank you so much for being here. We're gonna, you're gonna actually hear a lot more from me. Join the group on Telegram. I do have a lot of free content there, and they are the first one, my group on Telegram, Alex J 5% group. They are the 5%ers, so they get to see my free content and some signals and all that kind of stuff first. So make sure to join that group. You have the link down below to join, and I'll see you next time.